Joining us now is Mr. Brian Altounian. He's the founder of Wealth Maximization Strategies, Atlas Voyager Wealth Maximization Strategies, which is a mouthful, but a great company name. Brian, welcome back to the program.
Thank you, Don. Thanks for having me.
You know, one bit of news that didn't really make the headlines with all the Trump all the time news cycle that we experience these days is depositors are continuing to withdraw money from banks, and now they're coming out of major institutions. What's your take on that?
Yeah, well, I think that's a great. It's a great question. I think the challenge has been. By the way, just want to say this, Don. We're facing a debt crisis in this country that this summertime, I think it's been predicted for several years that was going to make the 2008 financial crisis look like a walk in the park. I think that some of the standards that the regulations have put in place to make sure that banks have maintained certain kinds of reserves. I think the Fed's jacking up the interest rates as quickly as they can didn't give the banking industry enough time to kind of absorb what the impact was going to be. You remember during the mortgage crisis, all of these banks had a bunch of mortgages on their books that were underwater. And rather than give the banks time to settle them out and expand the time frame, they forced them to shove a bunch of the mortgages out on the market to get them off their books, which then cratered the mortgage industry. I think we're kind of seeing the same situation here, where the banks had invested in long-term cycles, and then the Feds jacked the interest rates up so quickly that they didn't have a chance to kind of absorb the impact. And so it created a huge upside down situation, and depositors are freaked out because the FDIC, prior to recent changes, but was only protecting up to $250,000. So investors or depositors are freaking out, thinking that they're going to lose their money. And there's an interesting thing. I will say this. So there's a clause. I don't know if many people know about this. We think about bailout, like the government bailed out the banks back in the mortgage crisis, and understand the impact of a bailout situation. But there's also a bail-in clause that is creating potential havoc, and I think it's why depositors are concerned. So a bail-in clause, a bailout clause, let's just talk about that for a second. Bailout means that some external force is coming in to support the deposit, support the situation, so that all of the governance and everything can be protected. Some outside force. Bail-in means something from the inside. What that means is banks can help to create their own solvency by actually accessing deposits by their depositors. Now, this was done in Europe, in Crete, in Greece, not that long ago, where when the Greece economy was struggling, a lot of the depositors took their money and put them into banks on the island of Crete, and they had a bail-in clause. And so what happened was they were able to actually access all of those deposits, and depositors lost millions and millions of dollars through their bail-in clauses. Well, we have adopted a bail-in clause here in the United States as well. Most people don't know about it. So depositors are pulling their money out of the banking system because they are afraid that, short of a bailout, which there's a lot of resistance about the government coming in and bailing out the banks. Once again, the only other option for banking institutions could be a bail-in clause, which means they can access the deposits made by their depositors, and that money is gone. That's creating some havoc in the industry.
Well, bailout is not the answer. I mean, we're already $31 trillion upside down in debt. And as I said on this program many times, if we started paying that off at the princely rate of $1 million an hour, it would take 4,000 years to pay off.
Right. It's an insane amount. It's almost now like Monopoly. It's almost the numbers are so significant. They're massive, and they're almost too much to comprehend. But I think that that's leading to some of the concern. And a lot of the depositors are concerned about the viability of our banking institutions.
Now, we've talked about ERC money on this program a few times. How does all this brouhaha with deposits and money and bail-in, bail-out affect that?
Well, I think that what's happening is that especially if you're a founder, or if you're trying to get your company off the ground, or you're trying to get your company capital, there's a few different resources that you can get to access capital. We're starting to see, there was a report out earlier this week about private equity having some issues because there's some self-dealing in the private equity space, so that they're keeping the valuations high, even though stock prices are starting to come down. Depositors are, again, putting their money in the banks, traditionally the Silicon Valley banks and the other banks that held a lot of deposits of these companies. So individuals have to, and companies and company executives need to be looking at sources that they can access to get their hands on that capital. And the ERC program, I'm a huge fan. We have a link for MoneyTV, by the way, if somebody's interested in understanding more about the ERC program. But the ERC program was sort of an acknowledgement. The government said, we've mandated some change in operations during the pandemic. And for those companies that kept their employees, their W-2 employees on board, and did the right thing and kind of kept things moving along, the government's allowed them to access a rebate of their payroll tax and benefits that they paid in during 2020 and 2021. So the ERC program has been around now for a couple of years. It's only going to be around for a couple more. The reason why, Don, is because when you file your payroll taxes as a company, you file a quarterly payroll tax report. And the IRS only gives you a little bit of time, a couple of years, to amend that report if you need to make changes. So the ERC program allows people to actually make changes to their 941 quarterly tax return and access and get back a rebate of their, of the payroll taxes and benefits that they paid in during that time. In the early days, when this pandemic first started, PPP money, the loan that has since been forgiven, again, part of the issue that we've had with our trillions of dollars that we've generated, we've forgiven a bunch of loans. People could only access one or the other, PPP or ERC. Well, now the program's been expanded that if you took PPP loans during the pandemic, it still kept your people on board, you can still qualify to get ERC money back. It's an employee retention tax credit. So it's a credit of taxes you've paid in during that period of time. You can actually get some of that money back. And it's somewhere between 10 to 20, the number of people keep hearing on the radio is 10 to 26,000 per employee for that two-year period of time.
So it's truly found money. You don't have to stand in line at a bank to get it.
It's truly found money. And Don, I will tell you, every organization can qualify. I just submitted a charter school that kept, that had to change the way they were doing things, but they kept kids, in school, and they kept teachers on board. A church that couldn't meet face-to-face, they had to change the way they were doing their nursery school, to, construction companies, roofing companies, auto repair companies, basically any company that kept employees on board. If you had to have a minimum of 5 employees to qualify, if you kept your people on board during the pandemic, even with the government mandates, you get to qualify for ERC. It's truly found money. And by the way, it's in the hundreds of thousands to millions of dollars coming back to companies. No restriction on the usage. They can use it for whatever they want. No PPP, you had to use it for a certain purpose. ERC, it's a tax credit you get back. A check is sent directly from the IRS. No restrictions on how the money is used.
Well, Brian, I always wanted to ask you this question, but you have a lot of clients you're advising in financial matters. What's the best advice you're giving them right now?
Well, I would say that there's a few things, that the typical way of things, right now with a little bit of uncertainty, by the way, both financially and, what's going on with with the government and a lot of, as you said, the news cycle right now, there's a lot of uncertainty and a lot of concern, things that are happening over in Europe, things are happening with China and Russia, all of those things are creating a little bit of unease. So where you can, I hate to use this term, I kind of hate it, but keep your powder dry, try to, reduce your expenses, keep things moving forward, get access to, to the capital that you have coming to you. You'll explore every avenue that you can to make sure that you've got the financial support to get through this period of time. We're talking about at least 6 to 9 months of some uncertainty. Then of course we got the election cycle the next year. So it's going to be a period of unease. So whatever you can, I would say, put your money in places. I will say this, Don, put your money in places that are going to be protected from the possibility of the banking institutions and the government. I'm a huge fan of using insurance, life insurance, as a way to protect some assets. That cash is outside of the banking industry. That cash is money going into life insurance. Believe it or not, companies can use executive bonus programs using life insurance as a way to put some cash away and still have access to that cash. That's a great place to protect some money. So all of those things are things for people to be thinking about as they enter this era, this period of unease.
You mentioned the election cycle, and I'm always reminded what Mark Twain once said: if elections made any difference, they wouldn't let us vote.
I'm with you, by the way. And it doesn't matter what side of the aisle you're on. I think we all have that. And by the way, that's part of the issue, right? We don't know what's the right path, but we're having some issues now, and hopefully people can weather the storm.
Atlas, Voyager, Wealth Maximization Strategies, Brian Altounian, always a pleasure. Thanks for joining us.
Don, always great to be with you. Thank you so much. Great to see you.